Consumers are basically out of money in the US, and we're a 70% consumer-driven economy. And that's deflationary, and it points towards an equities bear market and a recession. So that might be the dominant factor going forward. But at the same time, like you said, you've got a rising money supply, you've got dramatically rising wages for the strongest unions in the US, and you've got massive government deficits almost everywhere. You know, the US is going to run a $2 trillion deficit, and there's nothing pointing in the direction of that going back down.
Hello and welcome to VRIC Media, where our mission is to educate you on how to make money in the commodities sector. I'm your host, Ted Butler, and today I'm glad to be joined by former Wall Street financial analyst turned Substack writer, John Rubino. In addition to authoring 5 books, John founded the popular financial website dollarcollapse.com in 2004, which he then sold in 2022. John, it's a pleasure to have you on today. Thanks for coming on.
Thanks for having me, Ted. It's nice to meet you.
You too. So today, John, we're going to talk about a range of things, from the upcoming BRICS summit to Putin's alleged desire to become a silver stacker, to what could be a blowout Q3 earnings season for gold miners. But before that, I definitely want to ask you about a recent article you wrote about wage inflation from over a year ago. And in this article, you make a really important observation about how corporate profits in America have been growing way faster than employee compensation. And more recently, there was a small win to celebrate for the East Coast dock workers, who just won a 61.5% raise over 6 years on the back of what you referred to as the most successful, perhaps the most successful strike in modern labor history. So, but before we start clinking our glasses, you state that the rise in wages might make the next imminent bust even worse than it would have been. So perhaps you could elaborate on why higher wages is not necessarily a good thing for the wider society.
Yeah, well, I'll start with a little bit of background.
Sure.
In the 1980s or so, we got the idea that globalization was net positive for the United States. And as part of that process, we started encouraging corporations to fire their unionized workers in the US and send those jobs over to China or someplace, and then, generate higher profits with that much lower labor costs that they would gain, and then pay their CEOs massive bonuses for being great corporate managers. And it did lead to a lot of corporate profits, but it also basically eliminated a chance at a middle-class lifestyle for tens of millions of high school educated Americans. If you had a factory job at, say, a GM assembly plant, you made middle-class money. And once that went away, all that was left was McDonald's or Walmart or something like that, which is a whole different thing. So we basically abandoned a whole generation of high school educated Americans. And corporations from the 1980s through the 2010s made a bigger and bigger share of corporate profits. In other words, wages were pretty much stagnant, but corporate profits went up, and the corporations got to keep all that extra money, which created kind of an aristocracy, a huge divergence between the haves and the have-nots in the US. So net, globalization turned out to be a bad deal for the US. And now the pendulum is swinging the other way. We're starting to bring jobs back to the US, and we're seeing labor, especially organized labor unions, gain a lot more power, and they're able to strike successfully, get big wage increases, and then start redirecting some of what was taken away from them in the past back towards themselves. So you're seeing that in the US with like the airlines are paying way more for their pilots now. And as you mentioned, just a couple of weeks ago, East Coast dock workers went on strike in the US, and within like 2 days, they settled on a pay package that's going to give them a 10% raise every year for the next 6 years.
Right.
And in general, this is a really good thing, because when the people that work with their hands have a chance at a middle-class life, you get a successful society where people basically are invested in the system as it is. It's a stable society that can grow organically going forward. And that's what we're headed for, and that's a good thing. But now that wages are starting to go up, we have to recognize that the Federal Reserve doesn't see rising stock prices or rising house prices as inflation. They think that's assets going up, which is a good thing because it enriches the already rich, people who own real estate and equities. But when wages go up, the Fed recognizes that as wage inflation, and they're terrified of it. So
Right.
when you see large parts of the blue collar workforce starting to get double digit raises, the Fed is going to interpret that as double digit inflation going forward. And if their target is 2%, they got to lean against that, which means they're going to be forced by the inflation numbers that come out if this kind of thing spreads. They're going to be forced to start raising interest rates again. And we've taken on so much debt over the past 50 or so years during this credit supercycle that began when we left the gold standard in 1971, that we're financially fragile. The whole global economy can't handle higher interest rates. So if the Fed and other central banks are forced to start raising interest rates, then everybody's interest cost is going to spike, and that's going to bankrupt entities across the global financial system, including a lot of governments. So we set the stage for that giant financial crisis that we know is coming just based on the debt numbers, being caused in part by rising wages. So in other words, there's no free lunch. Nothing that's great comes without a cost. And this is the cost that we're looking at. I still think it's worth it, but there is trouble on the horizon that's going to stem from people getting a fair wage in the U.S. And I hate to put it that way, but that's what we're headed for, and we basically just have to deal with it without starting a new round of globalization.
Hmm. Yeah, in that sense, the Fed is really stuck between a rock and a hard place. If it increases rates, then of course the recession risk potentially increases too. If it decreases rates, inflation is potentially unleashed. The Fed's favorite metric is, of course, CPI inflation, which increased by seasonally adjusted 0.2% for the month, putting the annual inflation rate at 2.4%. Both percentage points were 0.1 higher than the forecast. So there's that too. But beyond that as well, John, one of the things I'm concerned about is that the global money supply is surging and is now on a similar trajectory to what we saw during the pandemic. And that's from Crescat Capital's Tabby Costa. So if you kind of put two and two together, to me, it suggests as if inflation is not slowing as quickly as we expected. Food inflation, actually, in particular, has shot up in recent weeks. So my fear is that it could actually start to rear its ugly head sooner rather than later, inflation. To what extent do you agree with that?
I think that's possible. There are a lot of kind of under the surface statistics that point in the other direction. Consumers are basically out of money in the US, and we're a 70% consumer driven economy. And that's deflationary, and it points towards an equities bear market and a recession. So that might be the dominant factor going forward. But at the same time, like you said, you've got a rising money supply, you've got dramatically rising wages for the strongest unions in the US, and you've got massive government deficits almost everywhere. The US is going to run a $2 trillion deficit, or I think it may have already completed its fiscal year with a $2 trillion deficit. And there's nothing pointing in the direction of that going back down. So if we're going to run massive deficits going forward, which is extremely stimulative, and wages are going to go up dramatically, that kind of sets the stage for something similar to what happened in the 1970s. You're way, way, way too young to remember that decade, but it was a decade of currency crisis when we started spending too much money on the Vietnam War and the Great Society social programs in the US. That led to rising inflation, which led to rising interest rates, which led to dramatic volatility in the financial markets, and then to a horrific recession. Probably the worst recession since the Depression happened in 1982.
Right.
And it was a direct result of what happened in the 1970s. So we're creating those conditions again, only much worse, because we were in pretty good shape financially back then. And now we're the most financially fragile that any society has ever been in human history. So the risks of a replay of the 1970s would be it wouldn't be 1982. It would be something like 1924 and the Weimar inflation in Germany, or the
Right.
1930s Great Depression. So that's the risk we're running.
And yet, John, that's a great point as well. The 1982, almost no global investors expect a recession today. I mean, I think according to this Bank of America study, only 8% of investors expect a hard landing. 8% within the next 12 months. That's the second lowest reading in 2 years. And 76% of investors in this survey expect a soft landing. So it's almost like, do you think these investors are maybe delusional? They're they kind of ignoring the facts in front of them?
Well, delusional investors are a prerequisite for financial bubbles, because you can't have a financial bubble unless almost everybody who's participating is on the long side, right?
Right.
And that's where we are in equities right now. We got everybody thinking, well, um, AI is going to change everything, and the people making those chips are going to just make literally infinite amounts of money, and therefore you got to buy those stocks, and that pulls up the rest of the tech complex, which pulls up the Nasdaq, which pulls up all the rest of the equities in the U.S. And so we end up with one of those, really low market breadth, really high price bull markets. Those always and everywhere end with the horrendous crash. And with the stocks that led the blow off part of the bubble going down by 60, 70, 80%. After the dot-com bubble in the 1990s, when it burst in 2000, you had this thing called the 90% Club, which was the list of all the stocks that used to lead the market that are now down by 90%, by 2002. And that's a thing that happens in financial markets. And it has, what's happening right now is very familiar, because it's the way it normally happens psychologically. People get very excited. Everybody is on one side of the market, and there's nobody left to buy. So we're headed that way. And it's a question not of whether that's going to happen, whether the bust is coming, is as much as is what is the catalyst, which thing out there is going to blow up
Right.
that gives us that equities bear market and the next recession, which might metastasize into something worse. All of that stuff is coming. And it's a matter of timing and specificity. Which thing is the catalyst?
Yeah, and history repeats itself. Well, it doesn't repeat itself, it rhymes. You talk about the tech stocks there as well. There's this thing that I don't know who referred, it might be Alan Greenspan referred to it as irrational exuberance, which is typified towards the end of a bull market. And that's the kind of way that I'm looking towards the likes of Nvidia at the moment. And these tech stocks with hugely inflated price to sales or price to earnings ratios, whatever you want to call it. If you measure them from a fundamental perspective, they seem overvalued to me. And this kind of creates an opportunity for this rotation of capital away from tech stocks and into mining companies, for example, real tangible assets that are being mined there. How close do you think we are to that rotation of capital moment?
Well, see, the timing is always the question, right?
Right.
Because bubble markets go through various stages to reach their top. And in each of those stages, they kill off another group of short sellers. People who looked at the market, decided it was, rationally speaking, overvalued, and they bet against the market. And the market goes up again and bankrupts all the guys who are betting against it. So, you lose whole generations of short sellers in a bubble market. And the reason for that is that it's really impossible to call the timing of something like this. You can be, a brilliant finance guy and get the timing right or wrong by like 3 years, in which time your put options have expired worthless, or, your short positions are getting margin calls or whatever, and you're out. And then, what happens really at the top is that a lot of the previous bears turn into bulls. They say, I give up. This market is going up forever, and they get onto the other side. And so in retrospect, you can point to things that illustrated the top. When this famous investor stopped shorting and he went long, that was it. Or when this magazine ran a cover story about how this was going to go on forever. And when the bubble bursts, we'll point to a lot of things that probably are happening right now, that with hindsight, we should have known that was the day to mortgage the house and bet absolutely everything. You can't know ahead of time. So all you can do is get more and more cautious as a bubble market expands, And like what Warren Buffett is doing right now, most famous investor in the world. And what he does in every cycle is when he can't find any more bargains, he doesn't look at market levels. He looks at the number of bargains that are out there. In other words, excellent companies that are going to grow forever that are selling cheaply. When he
Right.
can't find any more of those, he starts raising cash. And his cash balance gets bigger and bigger, and people notice, and that's one of those signs of a top. Well, his cash balance right now dwarfs anything in his past. He's
Right.
got more cash on the sidelines than he's ever had before.
Yeah.
And that's because he can't find any bargains out there. So that's a sign that maybe we're getting towards the end.
Mm.
And a regular person can respond to that by raising cash as well, or by nibbling on some short positions, like buy some long-term put options on
Right.
the NASDAQ or the S&P 500 or a bank index or something like that, and hope that the bust comes before your options expire worthless. A long-term option gives you 2 years.
Mm.
And that seems like plenty of time for it to happen now. But I've got some options that I bought 2 years ago that are getting ready to expire, even though 2 years ago it seemed like 2 years was plenty of time.
Right.
The bust was definitely going to happen. Um, so you can't know, in other words,
Right.
what the timing is.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode.
Yeah, and I guess it's this question of what's the cost of being too early. I think Goring and Rosenzweig asked that question in a really brilliant article, actually. I would argue that it's better to be, pull out too early or, not stay in too long. I think you can always better to err on the side of caution. But, John, I definitely want to come back to that. But one of the things I wanted to ask you about quite quickly is about this theme of Russia potentially stockpiling silver and gold already. With the fears of the US dollar weaponization still looming, it's no surprise that Putin's been stacking gold like there's no tomorrow. In fact, Russia's gold reserves are worth approximately 200 billion as of the October the 1st, to the point where gold now represents a record-breaking 31.5% of the country's total reserves, and that's staggering. So more recent reports suggest, as I said, that Putin's appetite for hard assets could extend to silver, platinum, and palladium. That is, if you believe the plans that Russia will spend a reported 51 billion rubles over the next 3 years to replenish its precious metal reserves. The resurgence of silver in as a monetary metal in this capacity could bring about the rise to $50 that we've all been waiting for. But given the opacity of the data that comes out of the Kremlin, it's difficult to know exactly whether this is rumor or truth. What do you know about the Russian claims that platinum, palladium, and silver would be stockpiled? And do you think it potentially could be the beginning of a trend where central banks start to diversify their foreign reserves away from just gold, but to also other precious metals too?
Well, yeah. Okay. What I know about the situation is that silver has a great story. It's a monetary metal. It's an industrial metal. It's in deficit, meaning the mines of the world aren't producing enough to satisfy the demand. The silver stockpiles are running out. They'll be gone in a couple of years at today's rates. All of that points to higher prices. And then you got Russia coming in and saying they're going to add to the buying pressure on silver. So now that's unequivocally a good thing, but the question is, how big of a good thing is it? Because we don't know. We won't know until Russia reports some numbers, and even then, we won't know if they're gaslighting us or something. If they've got a a market strategy that involves manipulating silver in one direction or another by putting out fake buy operations and buying statistics, and so we just can't know. But when they start reporting, that will affect the markets one way or another. If it's a tiny little piddly number, silver might go down a bit because the people who were buying on the Russian news will have been wrong. If it's a big number, then the silver story just got much, much better. So we'll see. But I mean, there's no way that this is a bad story for silver. Russia adding to its precious metals reserves and buying silver now. So it's one more good thing. Silver just has so many good things going for it right now, between solar panel demand, which is rising, and there's a little bit of silver in each solar panel, and military spending, which is rising, and there's silver in advanced missiles, and microchip demand soaring on the whole AI bubble, and silver is part of that story too. So, and electric cars have some silver in them too. So, the demand for silver is just strong and growing, which, even if it wasn't a monetary metal, would still make it it would be like copper, it would be an energy metal that you definitely want to own. But then you take into account that it's a monetary metal that people buy when gold gets too expensive. See, this is now the time when silver normally starts to pick up and starts to outperform, because gold has gone up dramatically relative to silver lately, which means, you look at a Krugerrand, you look at it in your hand, it's a very pretty little gold coin, but then you think of a whole tabletop full of silver that you could get for the same money right now. And silver becomes kind of a no-brainer choice in the precious metal space. And then silver's such a small illiquid market that new investment demand comes in and just pushes it straight up. Happened in 1979, and it happened in 2010, 2011. So we're kind of seeing that process start to build again. And with or without Russia, silver probably goes to $50 an ounce and beyond in this cycle. But if you add, aggressive nation state level buyers to the mix, then we see $5,000 to $10,000 gold and $200 or $300 silver pretty easily. And I think eventually that's where we get, just because of the monetary destruction that's going on. We're wiping out our fiat currencies, which means anything valued in those fiat currencies goes up in fiat currency terms, and gold and silver will be no exception to that process. So, as you can tell, I'm a big fan of silver.
Likewise.
and I'm kind of, and I'm kind of talking my book here too, because I have spent the last 15 years stacking and buying gold and silver miners. So I really want this to happen. But the reason I did all that stuff is because I think it will happen. It's probably a story that is almost unavoidable at this point.
Yeah, and I guess there can never be 100% certainties in financial markets, but I'm still young, obviously, in my career, but my conviction for silver was so high that I actually dropped out of university to pursue, being an advocate for gold and silver investment. And that's because of the fundamental picture that you look at silver right now. You mentioned a few things that could be the things that could drive outperformance in the silver price. One of the things that I'm observing that has the propensity to do that is this military demand. It's obviously, again, much like Russia, is very opaque in the Silver Institute data as to how much silver is actually used in ballistic missiles and any military equipment for that matter. What do you know about the silver's usage in military equipment? And can you shed any light on that?
Well, all I see is the reports that say, well, this missile uses this much silver. And, how do you verify something like that? It's not like you can call the Defense Department and say, hey, I'm working on a Substack post, and I want to verify the silver number in your, this kind of missile. So, it's a safe bet that there is silver in high-tech armaments, because silver has characteristics that make it very useful for things like that. It's malleable, and it's conductive, and it's reflective, and it's stable. So, I'm sure that the military uses a lot of silver, but there's no way to know how much. And then, the whole how much silver is left in our stockpiles thing is also very opaque. We don't really know for sure who has what silver sitting in what vault. And I suspect, I mean, there are stories out there about how it used to be this many billion ounces, and now it's just less than a billion, things like that. People say that, but I wouldn't know how to check it.
No, and you can't.
So,
Listen, I've spent the last 2 years writing about silver, looking diligently as much as I could, and it's anybody's guess. We don't actually know how much silver is truly out there. There's a lot of it in South Asia. We do know that, but what I do know is that in order for this deficit to be closed, higher silver prices will be needed for private investors to hand over this silver, or recycling to be incentivized to hand over this silver, because the deficit's still big. A couple of 100 million ounces a year, and it's growing. So that's the silver thing. We're both aligned on the silver thing. I did want to come back to platinum and palladium. It's one that me and David Morgan have been paying attention to because of how hated they are. Platinum and palladium are included in this selection of metals that Russia would supposedly be stacking. And a lot of people don't know, but platinum and palladium have both been used in money back in Russia from 1828 to 1845 under the reign of Tsar Nicholas I. Admittedly, it wasn't a huge proportion, but it still happened before, and they all have all the same characteristics of precious metals, pretty much like gold and silver. The industrial side of platinum and palladium is less favorable because of the supposed transition to EVs. But if that falls flat on its face and we have sort of resurgence of automotive demand for internal combustion engine cars, along with potentially, it might be a long shot, but the advent of monetary demand for platinum and palladium from Russia and other countries, is there a case for platinum and palladium, or is it a no for you?
Well, there's a case for platinum and palladium. They're industrial metals that are used in a lot of different things. It's easy to see that platinum and palladium coins, or it's easy to envision them becoming part of the mix that a stacker would choose to build. But the whole electric car thing is a problem, or at least a near-term problem, because if electric cars start replacing internal combustion cars, then you don't need catalytic converters, and maybe you don't need platinum and palladium. And that's part of the story. But now I'm going to venture way beyond my area of expertise and say some things that will probably get criticized in the comments from people who know better. But lithium batteries are really flawed in a lot of ways. They definitely look like a transition technology rather than the ultimate goal of a totally electrified world, because they are energy intensive. They're very polluting to make them, so they're not green in the sense that if you add up the entire supply chains, carbon emissions and groundwater pollution and stuff like that, you don't get a very pretty picture there. So I think it's very, very possible that fuel cells become the next generation power source for electric cars. And fuel cells right now, because they don't pollute nearly as much and they're not nearly as dangerous necessarily as lithium ion batteries. And they use some platinum or palladium, today's fuel cells. And they also, there's next generation fuel cells that use silver.
Right.
So the fuel cell story could be very interesting over the next decade. I mean, not this year or next year, but there could be trends, there could be breakthroughs that are announced that move the timetable up, that make platinum and palladium interesting and make silver even more interesting. So it bears watching. But right now, I think silver is the better story, just because it's unequivocally monetary metal. It's something that in living memory was money. We all had pure silver coins, or 90% silver coins in our pockets back in the day. So I think there's no question that silver catches the monetary metal bid going forward, and platinum and palladium less so. But I wouldn't be averse to having some in the mix. And I think a lot of other people come to that conclusion. And, platinum jewelry is kind of trendy. I think for wedding rings and things like that, platinum is higher level conceptually than gold is. So, there's demand for those things. I don't think it'll be silver level, but I think it still might be interesting as a sideline investment.
Yeah, for sure. Definitely silver, gold, platinum in the order for me.
Yeah.
I did want to come to the BRICS summit. Obviously going to be held in Russia in Kazan. Took place in South Africa last year. The elephant in the room for me will be this question of a gold-backed currency or commodity-backed currency. In other words, is it just speculation or is it actually in the works? Last year, the BRICS decision to move to local currencies provided evidence of this gradual and considered trajectory towards becoming independent from the US dollar. To what extent do you believe Xi and Vlad will reveal anything material about the plans for a unified BRICS currency? And what are your thoughts in general for the BRICS summit, your expectations?
Well, I think the BRICS countries have a very strong incentive to bypass the U.S. dollar for most of their trade, and they're doing that. The Russia and China conduct most of their bilateral trade in their national currencies. So that part of the story is definitely happening. And I think these guys have more incentive this year than they did last year, because during this year, in other words, since the last BRICS meeting, NATO actually spent the money that they'd taken away from Russia. Russia's reserves that were in a vault in London, they were frozen last year. Now they've been spent on Ukraine. So Russia and the rest of the BRICS countries who wonder if they're next really want to get this done. But technically, it's not easy. It's not like they can just sit down and sketch something out on the legal pad and then make it work. So last year they kind of fooled us. They released some speculation about a new gold-backed currency, and then they didn't do anything with it at the meeting. But they did announce the induction of Saudi Arabia as a new member, which was that's enough to make that a big meeting right there. And so this time around, could be they fool us in the other direction, that they announce a fully formed gold-backed trading currency, and you can't know with these guys because Putin is a pretty good troll, actually. Like he'll say things that are just designed to rile people up.
Right.
And so he likes to do stuff like that. So this could be one of those things. But, what's happening with the BRICS right now is that they are progressing. They're buying gold. They're accumulating more gold. They're progressing technically in creating institutions that are replacements for the IMF and the World Bank. And they're talking about a trading currency backed by gold. And, this year they have more gold than they did last year with which to back their currencies. So all of that stuff is kind of happening. And, I suspect it's a longer term process that happens in dribs and drabs. Like maybe they release a currency, but it's very limited. They just do some trial trades this year to see how it works. And then next year they ramp it up a little bit where, a couple of big deals happen in that currency. And then they see if it clears and everything and how it sits in the different accounts and how everybody feels about their money sitting in a gold-backed currency in different accounts. And, it'll go on for a while. Now, what would speed the process up is if we get into some kind of a shooting war with Russia or China. If the U.S. intervenes in the Middle East or in Ukraine in a way that is an act of war against Iran or China or Russia, then the BRICS countries, that kind of forces their hand. They really can't be having their foreign exchange reserves sitting in London, or they can't be buying a bunch of dollars in order to trade, because buying dollars helps prop up the foreign exchange value of the dollar, which helps the U.S. fund its military. They can't be doing those things anymore. So geopolitics has a lot to say about this, I think.
Yeah,
but
and I would love you to expand on that, John, as well, and sort of talk to us about why the fear of further weaponization of the dollar could spell further repatriation of dollars. back to the US, and also further stacking of gold. I mean, is this trend going to continue, do you think, where, Russia's central bank foreign reserves allocation of gold goes from 31% even higher, and the same for China?
Yeah, a lot of the BRICS countries have been systematically converting their treasury bonds into gold as a reserve asset.
Right.
And beyond the obvious, the reason for that is that gold is basically inert and neutral. You're not making a political statement, or you're not joining a side necessarily by buying gold, because gold is just a thing that people have bought and held as a store of value since the beginning of human civilization, So, because on the other hand, if you buy treasury bonds and make that your reserve asset, you're kind of saying you're on Team USA. And a lot of the BRICS countries, to the extent that they ever liked that idea, like it less now than they used to. So gold as a neutral central bank asset is basically a theme whose time has come. I don't think there's anything that's going to be stopping most of the world's central banks from buying gold, because it clearly works better than treasury bonds right now, right? Gold over the last few years has gone up way more than dollar-denominated assets. So the countries that bought gold not only insulated themselves geopolitically from, having to take a stand on a lot of things, but they actually made money. They got richer by doing that. And because the central banks, buying gold were part of what drove the price of gold up, it's kind of a self-perpetuating feedback loop, right? Because they can create money out of thin air. So they do that. They use that money to buy gold. That pushes up the price of gold. That makes their central bank reserves more valuable, which allows them to create more currency and so on.
Right.
And there's no obvious end to that in sight. So, you would expect central banks to continue to buy gold just because they get it now. They recognize that gold is much more useful as a reserve asset than some currency that's being actively inflated away by its government. If the US is running $2 trillion a year deficits, do you want that currency? Because you know how multi-trillion-dollar deficits inevitably end. And do you want to be on the losing side of that trade by owning a bunch of treasury bonds when inflation spikes and we have a currency crisis here? And the answer for central banks who understand monetary theory is absolutely not. We want to own gold. So I think these are all stories that have legs. We can't know the timing, what happens this year, what happens next year, but we know these are trends that are going in a certain direction. And eventually they end up at a certain point. So I'm pretty confident in saying that the BRICS are going to do a bunch of things, and gold is going to be one of the beneficiaries of that. Right. And the U.S. is not going to like it at all. And so a lot of this comes down to how irrationally the U.S. responds to it. And we can't know that because that would mean putting ourselves into the mindsets of basically people who are psychopaths. And that's too unpleasant and is not really very easy to do anyhow. So that's where we are.
It's interesting. And I think a lot of the focus is on the BRICS and what they're going to do with gold. There's obviously a huge amount of gold sitting in Fort Knox. There was a huge amount of gold sitting in the UK until Gordon Brown sold it all in what was a fatal error, in my opinion. Do you think it's ever possible that the West will swallow their pride and re-implement gold into the monetary system, or to kind of have some kind of gold standard again? Or do you think it's just wishful thinking at this point?
Well, that happens when it's the least bad of a list of really bad options. Okay, if we're looking at Weimar Germany, the 1930s Great Depression, with all that means for the people in charge being the next Herbert Hoover,
right? Or
going back to a gold standard with some a big dollar denominator or devaluation and gold at like $10,000 an ounce or something like that, and then the government not having the ability to just create money out of thin air going forward, they're going to hate that. But the other two possibilities are going to be so much worse that it's possible that they try to make lemonade out of this. You get some politician announcing, I'm in favor of sound money and I think we should go back to the gold standard. And that kind of sells politically. Like you can get elected on that kind of a platform. So, yeah, so it happens not because anybody in power right now thinks it's a good idea and cares about sound money. It happens because things get so much worse financially that it's basically the only option left that keeps you from being pulled out of your office and hung from a street light in Manhattan. And I don't think we're that far away. This is a really contentious time, and there are people who are angrier and angrier and more likely to be out in the streets rioting now than ever before, or than ever since the Vietnam War and the Great Depression. So I think we're heading in that direction, and it's, again, timing's impossible to say, but that is kind of how the story is going to go. I mean, barring World War III, nuclear Armageddon changes this story completely, but barring that, things get worse financially. And the choices constrict down to just, 3 or 4, and then just 3, and then really only one that makes any sense. And that's the point where you go back to some kind of a commodity-based sound money. And I don't know if it'll be a gold standard. That's the most likely case, but it could be some other kind of thing where, Milton Friedman used to propose that there would be a computer that would create 3% more money each year. And that turned out to be impossible because, or unpracticable, because you can't define money well enough to make that work. But people will come up with other ideas like that.
Well, the crypto nuts out there would say that Bitcoin is that, and to some extent, who knows? I call them crypto nuts ironically. That some of them do have a point, but some of them are kind of ignorant to the downsides of a lot of the cryptos out there, which are kind of just casino rank investment grade assets.
Well, I think the Bitcoin thing is kind of happening organically, where some company decides, okay, we're going to have Bitcoin in our treasury, and we're going to maybe accept Bitcoin payments and stuff like that. In some country like El Salvador, just names Bitcoin as legal tender, and so you've got that kind of bubbling up, which is kind of how it would have and should have happened in theory, where you get this currency that's created via technology that's beyond the regulatory reach of any one government and is limited in supply. And, it's an exciting idea from a libertarian standpoint.
Right.
Technological money.
Better than the alternative, perhaps, that what we've got now.
Well, in some ways,
yeah.
Yes. But because it's not a physical thing, and it exists online, it's vulnerable from that point of view. Like, what if the next generation AIs can break the encryption that protects financial accounts online?
Correct. We don't know.
And then And so, if you've got a stack of gold and silver coins, you know what they are. And
with everything though, there's risk, isn't there, John? I mean, the crypto people would say, that's prone to confiscation.
Yes.
You can't go through airports with it. I think the answer ultimately, diplomatically, is both. But I am just more inclined towards gold and silver because it's, historically proven. Bitcoin's younger than me. There's so much still that's not been proven about Bitcoin yet. And look at Larry Fink getting his, little grubby mitts all over it. That doesn't bode well for me.
The co-option risk is there too with cryptos. Like the government and Wall Street and the big banks find a way to take it over. If they accumulate 51% of the Bitcoin out there, then they get to dictate the crypto going forward, right? They get to decide how many new Bitcoin are created. They can change presumably they can change that algorithm, and they can change other things about it. And governments at the same time are going to be trying to institute central bank digital currencies. So you've got a wild amount of competition going at that point.
Right.
And I just don't know. I mean, I really don't have a good prediction for the crypto / CBDC part of this story.
Right.
Because, the CBDCs are basically, they're not currencies as much as they are means of control.
Oh, of course.
So
absolutely.
they're
a Trojan
thing.
horse in that sense. They're kind of like being rolled out as something that's in the name of convenience, increase efficiency, speed, all these buzzwords that think, oh yeah, that could be a great idea. But actually, it's a Trojan horse for something that's a lot more dystopian, a lot more totalitarian. And frankly, it would be quite concerning if it became the only means of payment.
Yes.
And
Yeah.
cash was outlawed, and it was no more paper. I mean, paper's already a replication for a receipt for what used to be gold, and now not anymore. So we're getting further and further away from what the natural order of money, as Roy Seabag calls it, should have been. And that's worrying to me. One more thing as well, John, I wanted to ask you about. So, first of all, we don't need to spend too much time on the philosophical debate between Bitcoin, gold, and silver. The gold price has risen enormously to record highs, and this is creating an opportunity in gold mining stocks. I definitely wanted to get your thoughts, especially as we approach Q3 earnings season. I think there could be a kind of a ripple effect for the juniors if the producers have really impressive earnings. You know, we've already had BRICS release some preliminary Q3 production results earlier today, and the share price fell marginally by about 1%. But we also have Newmont, Agnico Eagle, Kinross to come. I'm curious to know, what mining companies have you been impressed with so far? It can be gold, silver, uranium, or whatever. And which companies have you got your eye on moving forward?
Well, the story in gold is that it rose during the second quarter, and then some of the big gold miners who are, well run enough to control their costs saw a lot of that increased revenue from a higher gold price drop down to the bottom line. So they had higher earnings and better cash flow.
Right.
That was really good. And
right.
The third quarter is liable to be more or less the same thing because gold has continued to go up. So their revenues are going to be up, other things being equal. And if they've controlled their costs, their earnings and their cash flow is going to be up as well. So now you don't just have a one-off, you've got a trend of 2 quarters in a row of the big gold miners reporting better earnings, which means all the generalist investors out there who look at earnings momentum
right.
or price momentum, since the stocks are going up too, are going to be interested all of a sudden because they don't necessarily understand mining, but they understand those kinds of trends.
Correct.
And there's just so much more generalist money out there than there is now invested in precious metals miners that you can get some serious price moves out of just 1% of global investable capital flowing into the gold and silver mining space. Which is what normally happens towards the end of precious metals bull markets. You saw it in 1999, or was it? When did? No, 1989, 1990, and then in 2010, 2011.
Right.
Generalist money was flowing into precious metals, and the miners really spiked. So yeah, it looks interesting, and I think at this point in the cycle, the big guys are completely acceptable to own. You just buy the GDX ETF and you get most of the benefit of what's happening right now. So that's easy. But, Agnico Eagle is a well-run company. So you could totally own that one straight up, and maybe Newmont, right. and be riding this thing. Right. And then, as that goes on, the cash flow starts to rise to a point for the big miners that it burns a hole in their pocket and they have to start buying up the little guys. And Correct. That's starting, and it'll really get going later on. But I think, it's possible the best story in the mining space right now is the uranium miners, because nuclear power was just hated for about 20 years since the Fukushima accident. Right. A lot of countries just shut down their nuclear power sectors and everything. And now people are figuring out that you really need nuclear power to run a modern country. So everybody's back into building nuclear plants, and there's not enough uranium coming out of today's mines to satisfy that demand.
Right.
And add to that now the fact that AI is leading all the big tech companies to set up server farms where that's how they run their AIs. Right. And those things are energy hogs, and they need it continuously. They need baseline power 24/7. So you can't run, Google's AI program or Amazon's with solar or wind. And they're concluding that it has to be nuclear. So the big tech, with almost central bank levels amount of money that they can throw at this, are just they're they're paying to have like 3 Mile Island refurbished and brought back online, and other mothballed plants, and they're throwing tons of money at the makers of SMRs, small modular reactors. And so the upshot is that there's a lot more nuclear power coming online than was expected even like 2 years ago.
Right.
And there's no new uranium coming online. So the uranium miners are looking really good. And today they're up, I think, probably on average, my Substack uranium miner portfolio is probably up 10% on average, the stocks that I have there. Just because of this, when big tech gets into something, I mean, that's the ultimate whale in the private sector, right? They have basically infinite money to throw at something like this, and they're in a race. So that's really good for uranium. And, it would have been better 2 years ago to buy these stocks, but they're probably still interesting for nibbling right now. You don't want to jump in with both feet because they've already had a nice run, but they're still just, I mean, operationally, the best run uranium miners are just looking great right now. And financially, their stocks are looking pretty good too.
Right. And you mentioned the big tech guys. I think Sam Altman, ChatGPT guy, or the founder, I think he owns a uranium mine or has some kind of exposure to one. So yeah, you're absolutely right. Bill Gates as well. I'm sure. I remember seeing that he has some kind of exposure to uranium as well. So yeah, it's a great story, and there's probably still some juice left in it. I just think there's more opportunity in something like a silver miner from my perspective at the moment. Probably because I'm more biased because I know the story better and I've been researching it. But also because I still think the price has a lot further to go.
Yeah, I totally agree with that. Silver miners are still out of favor, even after a 2-year precious metals bull market. So I think there's a lot of 10-bagger potential, especially the smaller silver explorers and miners. So yeah, it's more speculative, but that's where the really big money gets made from here, I think.
And obviously, the merger and acquisition activity as well, been picking up in the silver sector of late, with Core buying out Silvercrest, First Majestic buying out Gatos the other last month. Are you expecting that to continue? And are you seeing any evidence of any companies that you think might merge? Or I'm not asking you to get your crystal ball out, but anything on that front?
Oh yeah, well the mid-range and smaller royalty streaming companies are really obvious takeover candidates because they're totally understandable for the big royalty and streaming companies. It's not like that the big royalty guys have to fly to Uganda and check out a mine and make some kind of determination about that mine to buy the whole mine or something like that. They can buy a small royalty company and get a portfolio of promising emerging mines and just instantly diversify that way. And the big guys are savvy enough to be able to judge the quality of a given smaller royalty company's portfolio pretty easily. So they'll be snapping them up, I think. And also the big royalty companies are valued much more richly than the smaller guys are. So they can buy a smaller guy and fold it into their portfolio and instantly have the acquired assets be revalued at the higher level that the big company is valued at. So that's an obvious one. And then there's a lot of, or not a lot actually, but there are some silver explorers out there and junior miners that have like one mine or something like that, who are successful, and they've either defined their property or they're starting to make some cash flow and stuff like that. And once things gets going, they're obvious takeover candidates. And like Snowline up in the Yukon has just, they've spent the last year reporting just otherworldly drill results.
Right.
And so they can be bought out. Or let me think, Dolly Varden Silver.
Right.
Yeah, and they've got a property on which they're finding a lot of silver, and they're starting to find some gold and starting to find some copper, and they're right next to a big property of Hecla's, and Hecla has already tried to buy them out.
Right.
So that's a very logical kind of merger scenario there. So there's lots of stories out there like that, and I think you're getting into this at just the right time because now the stories aren't 7 years from now, this will happen. It's like, oh, maybe next year this will happen or whatever. So
Right.
it's going to be very exciting doing what you're doing, because there's always going to be some kind of M&A story almost every week for you.
Right, and we're seeing this already picking up, like you mentioned, that Dolly Varden story, absolutely possible and maybe even likely at this point. I've got plans to go down to Latin America later this year, John, and companies like Abra Silver, Outcrop Silver, there's in Colombia, Argentina, there's really some fantastic jurisdictions down in Latin America. Are you sort of where would you say your investments are focused? Do you stick to North American companies, or are you kind of what's the word? You don't discriminate on jurisdiction.
Well, I've seen enough geopolitical weirdness lately that I do care about jurisdiction, because
Right.
Panama, for instance, just closed one of the world's biggest copper mines, and apparently nobody so far has gotten a penny out of that. And
Right.
so the more risky the jurisdiction, the better a miner's results have to be. And then the question kind of becomes is, are we putting too big of a risk deficit on these companies that are in less than perfect jurisdictions, and how are we valuing the risk? And, sometimes it gets overvalued, it gets overemphasized. And so to really do this right, you need some expertise that allows you to say, not just, oh, Nicaragua's kind of risky, but how risky is it? And how do you quantify that relative to British Columbia or something like that?
Right.
And that's a level of expertise that is frankly beyond me. So I just tend to generally like companies that are in Nevada or British Columbia
Right.
or someplace like that better than somebody who's even in Mexico right now, where they apparently they're not going to do it, but they were talking about making open pit silver mines illegal. And so that's the kind of thing that, you don't want to have a ton of your money invested in something like that when some new government comes along,
Mm.
and that's their first proposal. So yeah, it's risky.
Mm.
And what I think a solution is for a lot of people with stuff like this is physical ETFs. If you buy, say, the Sprott Physical Silver Trust, then you own physical silver in a vault that is being taken care of by a fairly trustworthy company in a fairly stable place. And you get a big part of the silver bull market just by owning that physical silver
Right.
in a trust. And so there's a uranium trust, and there's a copper trust, and there's a gold trust. And I think, somebody who really doesn't want to dig into this stuff can get most of the benefit of a bull market just by buying those 4 physical ETFs,
Correct.
and
Correct.
then you've got a chunk of everything.
I guess it all comes down to, how much time you have to do the due diligence. I think you could be rewarded by actively stock picking, but if you're not in it every day like we are, it might not be for you. And also your risk tolerance as well. You mentioned copper there with the Panama situation. I wanted to get your thoughts on the macro side of copper, and then we'll finish. We've not spoken about it as a metal or copper miners. The recession, hard landing, if we do have one, could potentially damage copper demand. China is obviously huge for copper demand. Is it something that you're paying attention to maybe after uranium? You want to sort of line up some copper plays, or is not really for you?
Oh yeah, it absolutely is a great story. It's silver-esque copper's
Yes.
story, except that it's not a monetary metal. But
Right.
our plan is to electrify the world. That's what humanity is going to try to do over the next 20 or 30 years. And there is nowhere near enough copper for that, because copper is part of the whole energy transmission matrix there. You can't really build out an electrified world without copper. You can't make electric cars without copper. You can't have all of these server farm AI projects that are on the drawing board right now without copper. And it's very hard to get more copper because copper mines are big. First of all, they're environmentally stressful for the country that has them because they're just massive. Copper is not very expensive per pound. It's like $5 or maybe $4 now per pound, which means $1 billion worth of copper is just an immense amount of copper, and to get that the mine has to just go to the horizon. It has to be this giant scar. And there are very few places left in the world where you can put something like that and get away with it. That's why the Panamanian mine closed, and
Right.
those first Quantum's Cobre Panama mine. The environmentalists just weren't having it, and they won. They got that mine shut down. So it's going to be hard to come up with enough copper to do the things we intend to do, which means the price has to go way up. The price has to go up enough to bring really marginal copper deposits online.
Right.
And nobody wants to do that now because you need $10 a pound or $15 a pound or whatever. And we're nowhere near there yet. So yeah, copper. But copper, of course, as you said, is a cyclical commodity. And if we have that recession in there, which we probably should have in the next couple of years, copper will suffer.
Hmm.
So copper, and silver is the same thing. It's liable to go down during a recession and an equities bear market. But if that happens, just keep dollar cost averaging right through
Right.
it. Just keep adding it. And if it goes down, then you get more for the same amount of dollars that you're throwing at it. And you win in the end. So you can get through a downturn psychologically that way, knowing that you're still buying and you're going to get it cheaper next time around, and that makes it much easier to deal with the boom and bust cycles that we're part of now. So I think 15 years from now, let's say, copper is this incredible success story. But a year or two from now, it may be it may be one of those things that feels unsuccessful. And that's not a guarantee, but it might just be one of those things. But the prize is out there. Sorry, go ahead.
Sorry, John. No, I said better to be early than too late. Obviously there are some copper mining companies that may collapse before now and then, so you don't want to go all in on copper. But I don't think they would, for the right company, the right price, I think it would be, there's nothing wrong with getting involved in copper now with the view of what it's going to become going forward. So I think we'll end it there, John. It's been a pleasure having you. I've really enjoyed this conversation. Please let our audience know where they can find you.
Thanks, Ted. I'm at rubino.substack.com, and I publish a newsletter there that focuses on actionable advice for all the stuff we just talked about. In other words, how do you structure your life so you don't just survive something like this, but you profit from it?
Fantastic. Okay, John, thanks for coming on, and thank you for listening.